Cluster Accountancy Numerical Problems Solutions, presented by requisite.com. In this video, we are going to provide Reconstitution of a partnership firm, admission of a partner, problem 19 solution. The problem statement is as follows. A and B are partners in a firm sharing profits and losses in the ratio of 3:2. They decided to admit C into partnership with 1/4 share in profits. C will bring in 30,000 rupees for capital and requisite amount of goodwill premium in cash. The goodwill of the firm is valued at 20,000 rupees. The new profit sharing ratio is 2:1:1. A and B withdraw their share of goodwill. Give necessary journal entries. So, this problem requires us to prepare the necessary journal entries. Now, it is given in the problem that the new partner C has brought 30,000 rupees in capital and the required amount of goodwill premium in cash. It is also given that the goodwill of the firm is 20,000 rupees. Note that this is the total goodwill of the firm, not the goodwill brought by the new partner C. But we can find the goodwill brought by C using his profit sharing ratio. So, as per the problem, C is admitted into the firm with 1/4 share in profits. So, the goodwill premium brought by him into the business will be 1/4 of the total goodwill of the firm, which is 20,000 rupees. With this information at our disposal, let us now find the goodwill premium brought in by the partner C. So, C's share of goodwill is equal to the total goodwill of the firm, 20,000 rupees multiplied with his profit sharing ratio 1/4. Cancelling with 4 ones are 4, 5,000 are. The result of this calculation is 5,000 rupees. This is the amount of goodwill premium brought in by the new partner C. To summarize, the capital brought in by the partner C is 30,000 rupees. So, to record this, we should debit the cash account with 30,000 rupees. At the same time, as this is the capital brought in by the partner C, C's capital account should be created with 30,000 rupees. And as we have just now calculated, the goodwill brought by the partner C is 5,000 rupees. So, we should debit the cash account with 5,000 rupees and credit the premium for goodwill account with 5,000 rupees. Note that overall, the cash account should be debited with 35,000 rupees. With this information at our disposal, let us now proceed to journalize this transaction. Let us first write the journal heading. Let us also have the rest of the format of the journal. Let us first write the cash account as the debit entry. Let us also write the text DR to indicate that this is a debit entry. Let us then write the debit amount of 35,000 rupees into the debit amount column. Leaving some margin, let us write C's capital account as the credit entry. As you know, the credit entries start with 2. Let us then write the credit amount of 30,000 rupees into the credit amount column. Let us then write premium for goodwill account as the next credit entry. Let us then write the credit amount of 5,000 rupees into the credit amount column. Let us then write the description or narration of this transaction as being amount brought by C for his share of capital and goodwill. Let us then draw a line to mark the completion of journalizing of this transaction. With that, we have completed the journalizing of this transaction. Let us now consider the next step in the problem. Now, the goodwill share brought by C is shared by A and B in their sacrificing ratio. I repeat, the goodwill premium is shared by the old partners in their sacrificing ratio. If we don't know the sacrificing ratio, they share the goodwill in their old profit sharing ratio. But here we can find the sacrificing ratio. So we should consider that they share the goodwill premium in their sacrificing ratio. But to find the sacrificing ratio, we should know what is their contribution to sacrifice. To find this, we use the formula sacrifice is equal to old share value minus new share value. Now it is given in the problem that the old partner's profit sharing ratio is 3:2. After joining C, the new profit sharing ratio of all the three partners is 2:1:1. Let us write this here for reference. Old profit sharing ratio is equal to 3:2. New profit sharing ratio is equal to 2:1:1. So, the sacrifice made by the old partner A is equal to his old share 3/5 minus his new share 2/4. Considering 20 as LCM, the numerator will have 3 4s are minus 2 5s are. This is equal to 12 minus 10 whole upon 20. This is equal to 2/20. I am not going to simplify this. Let us leave this denominator as 20 here. It will make the things easier for us while calculating the sacrificing ratio. So the sacrifice made by the old partner B is equal to his old share 2 upon 5 minus his new share 1 upon 4. Considering 20 as LCM, the numerator will have 2 4s are minus 1 5s are. This is equal to 8 minus 5 whole upon 20. This is equal to 3 upon 20. So the sacrificing ratio of the old partners is equal to 2 upon 20 is to 3 upon 20. After cancelling 20 in both the denominators, this is equal to 2 is to 3. Just to remind you, the goodwill premium brought by the new partner C is 5000 rupees. We should distribute this goodwill premium among the old partners in their sacrificing ratio 2 is to 3. So the goodwill distributed to the old partner A is equal to the goodwill premium brought in by the partner C, which is 5000 rupees multiplied with partner A's sacrificing ratio 2 upon 5. Cancelling with 5, 5 ones are 5 1000s are. If we multiply the remaining 1000 and 2, we get 2000 rupees. This is the share of partner A in the goodwill premium brought by the new partner C. And the goodwill distributed to the old partner B is equal to the goodwill premium brought in by the partner C, which is 5000 rupees multiplied with partner B's sacrificing ratio 3 upon 5. Cancelling with 5, 5 ones are 5 1000s are. If we multiply the remaining 1000 and 3, we get 3000 rupees. This is the share of partner B in the goodwill premium brought by the new partner C. See, when the premium for goodwill is received, we recorded the premium for goodwill in the premium for goodwill account. So, to distribute this premium for goodwill to the old partners, it should be transferred to their capital accounts. So, to move the premium for goodwill out of the premium for goodwill account, we should debit the premium for goodwill account with 5000 rupees, and partner A's capital account should be created with 2000 rupees, and partner B's capital account should be created with 3000 rupees. With this information at our disposal, let us now proceed to record this transaction in the journal. Let us first record the premium for goodwill account as the debit entry. Let us also write the text DR to indicate that this is a debit entry. Let us then write the debit amount of 5000 rupees in the debit amount column. Leaving a margin, let us record partner A's capital account as the credit entry. Let us then write the credit amount of 2000 rupees in the credit amount column. Let us then record partner B's capital account as the next credit entry. Let us then write the credit amount of 3000 rupees in the credit amount column. Let us then write the description or narration of this transaction as being goodwill brought in by C is distributed among A and B in their sacrificing ratio. Let us then draw a line to mark the completion of journalizing of this transaction. With that, we have completed the journalizing of this transaction. Let us now consider the next step in the problem. Now, it is given in the problem that the old partners A and B withdrew their share of goodwill. See, we have created the goodwill to the partners' capital accounts, right? So, when they withdraw their share of goodwill, their capital account balances will reduce. So, we should debit the partner A's capital account with 2000 rupees, and we should debit the partner B's capital account with 3000 rupees. Also, when the partners withdraw their share of goodwill, they withdraw it in the form of cash. So, the cash amount available with the business will reduce. So, we should create the cash account with 5000 rupees. With this information at our disposal, let us now proceed to record this transaction in the journal. Let us first record partner A's capital account as the debit entry. Let us also write the text DR to indicate that this is a debit entry. Let us then write the debit amount of 2000 rupees in the debit amount column. Let us then write partner B's capital account as the next debit entry. Let us also write the text DR to indicate that this is also a debit entry. Let us then write the debit amount of 3000 rupees in the debit amount column. Leaving a margin, let us record cash account as the credit entry. Let us then write the credit amount of 5000 rupees in the credit amount column. Let us then write the description or narration of this transaction as being amount of goodwill withdrawn by both A and B. With that, we have completed the journalizing of this transaction. And with that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.